Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 373 on May the 3rd, 2025. I'm your host, Eric. In this week's show, we'll cover the trades from last week on the AdvisorShares Trust Pure U.S. Cannabis ETF, Norwegian Cruise Line Holdings, and SoFi Technologies. And we discuss three new trades on Iris Energy, Hut 8 Corporation, and Intel Corporation. Now, it's always great to hear back from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets gave a second consecutive week of positive returns. The Dow Jones Industrial Average grew 1,203 points, closing at 41,317 points on Friday. The S&P 500 index grew 161 points, ending the week at 5,686 points. And now it's time for the topic of the week. The topic of the week this week is the daffodil principle. This is a concept I picked up from a book called The Life of Excellence, written by Richard E. Simmons III, a pastor from Birmingham, Alabama. He tells a story of a lady who sees a beautiful field of daffodils in multiple colors planted along the side of a mountain. And there's a sign on the door that answered common questions that everyone asked. It had taken 30 years to plant the field the way it is today. Each bulb was hand planted one by one. Most importantly, all of the work was done by one dedicated person. It's a reminder that you can build and design a beautiful life. It's going to take work day by day. And if you stay focused on planting a certain number of bulbs per day, at some point, you'll have a beautiful field of flowers that is impressive to you and everyone around. When it comes to trading, I think about this often. Maybe your goal is to capture 50 points a day or 50 points per week or a certain percentage per month or something like that. Whatever the unit, stay focused on that. When I aim for consistent returns, I do a pretty good job of reaching them. The challenge is that I'm also my worst enemy. I get bored with the consistent returns and decide to, go for a home run. It's like when you're on a golf course and you're hitting them straight with that 7-iron, but nothing feels better than crushing that driver. So you pull out the driver and you shank the shot, right? I've turned down consistent profits trying to capture that home run, only to end up striking out altogether. So today, my focus is back to consistency, one bulb at a time to grow the beautiful field of daffodils. That's it. All right, so let's get into the review of last week's trades. We're going to start off with the covered call on the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. At the time, the stock was trading for $2.80 per share. I looked at buying that stock and selling the May 3 call at 16 cents, hoping for a return of 12.86% in 3 weeks. Well, shares of MSOS grew 21 cents, ending the week at $3.01 per share. The call option that we sold grew 5 cents, leaving us with a net profit of 16 cents if we were to close the trade out immediately. Now, this trade is already on the way to working out at its maximum return, which is more than double that amount of money that you make by closing the trade out early. So no need to make an adjustment at this point. Stay the course and let's see what the stock price does over the next 2 weeks. As always, have a plan for what you'll do either way. Next up, there's a credit spread. We looked at the Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. At the time, the stock was trading for $17.24 per share. I looked at selling the May 17, 16.5 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now, shares of Norwegian Cruise Line grew 13 cents, closing the week at $17.37 per share on Friday. The out-of-the-money put spread that we sold is still out of the money, meaning the trade is working out as planned so far as well. Now, with 2 weeks until expiration, we just want to see the stock expire above $17 per share or higher. So Have a game plan for any changes that could come over the next couple weeks, but for now, no adjustments are needed. And then our last review of last week's trades is a debit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time the stock was trading for $12.88 per share, I looked at buying the May 12.5 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 3 weeks. Well, shares of SoFi lost 18 cents, ending the week at $12.70 per share. The in-the-money call spread that we bought is still in the money, so the stock price is still 37 cents above our break-even point, and as long as this stock expires above $12.50 per share, we will enjoy the full expected return of 51.52%. So keep track of the stock price over these next couple weeks and make sure you have a plan. I keep reiterating that. Make sure you have a plan for if the stock moves against you over the next 2 weeks. So that's it for the review of last week's trades. Let me take a moment right now and acknowledge that I am recording the show much later than normal. I actually spent roughly 72 hours, 3 days in the hospital this week dealing with some knee issues. I did not expect to be held overnight, and I can't even tell you guys how happy I am to be recording the show back from home. The hospital was not fun, but it was necessary at the time. So I'm thankful for them. And I'm also thankful to be able to get back to you guys and record the show, even though I'm posting it up a little bit late. So hope you forgive me for that. Let's go ahead and get into the trades for this upcoming week. And of course, this is the last week that we're going to use the May 16th expiration, because that's only 2 weeks away. And because of the shortened time frame, all of the trades on this week are additionally risky because there just isn't much time to make adjustments. All right. So we're going to start off with the covered call on Iris Energy, symbol I as in India, R as in Romeo, E as in Echo, N as in November. The stock ended the week at $6.53 per share. I'm looking at buying stock and selling the May 7 call at 32 cents. That could give us a return of 12.10% in 2 weeks. Now you enter this trade by buying stock for $6.53 per share and selling the May 7 call at 32 cents. This trade makes the most money if stock prices finish above $7 per share. The break-even price on this trade is $6.21. In real terms, the stock purchase will require $653, and you'll collect $32 for selling the option. Next up, we have a credit spread. Looking at Hut 8 Corporation, symbol H as in hotel, U as in uniform, T as in tango. The stock ended the week at $13.80 per share. I'm looking at selling the May 13 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the May 13 half put at 84 cents and concurrently buying the May 13 put for 67 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $13.50 per share. The break-even price on this trade is $13.33 per share. In real terms, you'll receive $17 per spread that you sell and have $33 at risk. And our final trade for the show, for this week's show at least, is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $20.62 per share. I'm looking at buying the May 20 half call spread for 33 cents. That could give us a maximum gain of 17 cents, or that would be a return of 51.52% in 2 weeks. Now, you enter this trade by buying the May 20 call for $1.13 and concurrently selling the May 20 and a half call at 80 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $20.50 per share. The break-even price on this trade is $20.33 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. I know it was a short one, very concise, probably because I need to go lay down, but I wanted to make sure I got the show out for you guys. Thank you for listening. Thank you for the emails you guys send. I do have the best listeners in the industry, and that's because of you. All right, have a wonderful weekend. Do yourself a favor and stay out of the hospital if possible. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.